Hi, welcome to today's trade, example trade and the analysis. So this is the very first trade for this channel. I've been doing some of the trades before I started the channel, but just to keep everything transparent and cohesive, I will not be talking about the previous trades. And so today we're going to start by doing one of my favorite strategy, which is called an Iron Condor. Iron Condor, which is a options trading strategy. All right. So this is the strategy today, and I will be talking about the different type of details about the trade. But if you don't know what Iron Condor is, really it's just a trading style that basically sets a zone for the upper price and the lower price, and then as long as the trade, the stock price, the underlying stock price stays between that zone, then you make money. You come out fully profitable. All right. So then I'm gonna explain what I mean in just a little bit. Okay. So just keep that in mind. It's called Iron Condor, and I might do a future video to talk about it in more detail. Comment below if you would like me to go into more details about what this is. But let's talk about exactly how I'm gonna do this. All right. So the stock I'm looking at today is Amazon. So Amazon has been, we all know that Amazon is, it's a high market cap type of stock. So really, it kind of goes hand in hand with how the S&P 500 index is performing, right? So that's the reason why this is such a good choice in my mind today. And for Iron Condor, so as I mentioned, we are here to take profit by making some options trading style of trading here. All right. So what I'm gonna have to do is first of all identify where I think the top is gonna be for the next 30 days or so. Okay. So if we take a look at the chart, then we can see that the previous high is right around the $20,050 area. Right. That's a previous high. So, and then looking at the broad stock market right now, I'm thinking that it's gonna be really hard for Amazon to retest that high in the next 30 days. I mean, it will eventually, but in the next 30 days, chances are, it's probably gonna be trending sideways or even down a little bit. Okay, just because again, as you know that it announced earnings on April 25th, and which kind of beat all expectations, and then the stock went up a bit, but now we're seeing that it's coming down. So the topping effect has already happened. So it's probably gonna consolidate and trade sideways, high probability. So again, we're only kind of betting on it trending between the zones. So given that, I would like to set my top level to be right around the 2050 area. All right, that would be where I would set the top. Okay, and then I would like to set something on the bottom as well. And so taking a look at that, I can see that it has, in the previous 30 days or so, it has really strong support around the 1800 area right there. So in the next 30 days, I'm looking to set the bottom zone here right around the 1800 area as well. So again, without going into all the details of what an Iron Condor trade looks like, basically in the next 30 days, if I set my expiration date for 30 days out, and then in the next 30 days, if the stock just keeps on trending between these two lines, right, under 2050 and above 1800, and then as long as it stays between those two lines for the next 30 days, then I become fully profitable on this trade. Okay, so that's really the concept. Okay, so now that we understand why I'm making this trade and how I'm going to approach it, and so again, there's no guarantee that it's going to work out. That's the reason why I'm, being fully transparent and documenting all the steps, for this channel, right? Just keep that in mind. Okay, so the next step is we're gonna move forward to the trading platform, and let's take a look at how exactly I'm gonna be executing this trade in the trading platform, right? So again, 2050, 1800 for the bottom, and then of course there are a lot of details and nuances for Iron Condor, but you'll kind of see that in the in the actual trading video that when I go into the trading platform. And then obviously, again, if you want me to go into a lot of details about exactly what Iron Condor is, comment below. And then if there's enough people subscribing to the channel and commenting, then I will make a detailed video of it. All right, but otherwise, just follow along and then see if this makes sense to you. Okay. Okay, so now let's take a look inside TastyWorks and see how we're gonna do that trade. So I'm gonna click on Amazon, AMZN, and let's choose a strategy, which is the Iron Condor, as we talked about for this particular trade. So I'm just gonna go ahead and set the call leg and the put leg here. So $1,800 that we're gonna buy for the put, and then selling 1810. And let's go out to the expiry date of June 7th. And well, let me double check. Oh, well, actually, sorry, we made a mistake here. And as per the analysis that we did, we're actually going up to a little bit higher. So let's go up to 2060 that we're gonna buy, and 2050 that we're gonna sell, and that will complete our Iron Condor. And it looks like we should be able to get around $2.80 per share, and so I'm gonna try that. So based on this, if it's $2.80, I should be getting, after fees and commissions, about $275 by putting up $1,000, which would be about a 27% return in 37 days. And just like that, the order got filled. And well, actually, it's even better. We got filled at the $2.83. So that would be a 0.3% return in the 37 days, which is good in my books. So we'll keep track of this position, and with any updates, if we need to make any adjustments, and then I will be updating and reporting back soon. Okay, so now let's take a look at exactly what that trade looks like now that we have actually gone through it in the trading platform, TastyWorks, what I'm using. So this is the Iron Condor. As you can see, what we did just now was to set the bottom leg and the top leg as we first discussed. And the little details here are that you'll see the difference between what we sold the call and also the put for, and what we bought the call and the put for are the same, right? Would be the difference of $10. Okay, so essentially it means that we are selling the 2050 call or selling the 1810 put, and then buying back the 2060 call and the 1800 put. So this means that by doing this, we have defined our risk to the difference between the two legs. And the difference between both happens to be $10. All right, so because it's the $10 difference, that means we are risking $1,000 per contract. Okay, $1,000 per contract. So remember, that's what I'm risking right now. Okay, so worst case scenario would be that I lose $1,000. So that's exactly what I'm risking, and the capital commitment for this particular trade. Okay, so, and then once I've done that, and because the price of the stock can only be moving in one direction, is either going to move towards the 2000 level or move towards the 1800 level, it cannot be going to both directions at the same time. So I can only lose on one side of the trade. So that is why, even though it looks like there are two sides for the trade, and then looks like it might, the commitment level of the capital should be 2000, but it's only 1000, because again, you cannot lose on both ends of the trade at the same time. Okay, so hope that makes sense. So that's the first thing that we need to know. I put in $1,000 capital, and that's what I stand to lose in a worst case scenario. And then the second thing is that we need to know would be the expiration date or expiry date of June 7th. So and today when I made the trade was May 1st. So that means it's roughly a 36, 37 day trade. So let's say 37. Okay, so this trade will last for 37 days if I don't close it early. Again, I will have a chance to close it early if the trade really goes my way and I have taken most of the profit out of it. So keep that in mind as well. So, but if we don't do anything, then it expires within our cash zone, which would be between 1,810 and 2,050. Okay, so if it's close between these two numbers, then I'm fully profitable. And what is the profit potential on this trade that I just made? And that's pretty easy as well. So as we know, I was able to get a premium. We tried for a premium of $2.80 per contract. Per share. So that would translate into $280 that I can make potentially, and for this trade. So there you go. So that is exactly what this trade looks like. With and then another thing would be this number right here. That is the probability of profitability, or POP. We're just gonna call it POP from now. Just keep it short. All right. So we have so with this setup, we have a 66% of being fully profitable. Okay, so that's not. It's a little bit lower than what I usually is comfortable with, but for this particular trade, with the profit potential, the risk rewards actually makes sense. All right, so now let's talk about what the overview would look like right now then. Okay, so I have put in $1,000 of capital for this trade, and for the potential of making $280. Okay, so that would be a 28% return on investment in 37 days. All right, so that is actually really, really good. And that's the reason why I said that the 66% POP, P-O-P, makes the risk rewards pretty bearable. Okay, so the next thing we need to know is that I am actually reserving another $1,000 on the side in cash. Okay, just in case if I need to go in and make adjustment to this trade if the trade doesn't go my way. All right, then of course we won't know until the trade starts to play out over the next few weeks. And yeah, so there you go. I'm gonna keep you guys updated, and we'll be able to further the analysis and keep on going. All right, so expect another example trade coming real soon, and then we're gonna get this puppy moving forward and really getting it going. Okay, so there you go. See you guys next time. Like and subscribe for more content like this, and also just really share with anybody that you think might be interested, and I'll talk to you guys soon.